So today is an incredibly important day because the last few weeks have been crazy on the markets and there have been huge worldwide events that have shifted not only the order of the world, but shifted the markets up and down and back again. So in today's video, we're going to take you through exactly what has been happening recently in the world to shape these markets. But even more importantly, I'll show you the single most important piece of information to inform your investing today based on the market crashes of the past. And on top of that, I need to show you an incredible opportunity right now to grow your passive income with some amazing dividend stocks that are showing great prices right now. Welcome to Casual Cash, so let's get started. The most important thing we need in investing is information. In order to build our wealth over the long term, we need to know what is happening in the world, how it affects us, and of course, how, where, and when to invest our money. And luckily, we are going to talk about all of that today. So please take 3 seconds just to pop down a like on the video. I would really appreciate that, and subscribe if you want to see more. Let's start with what is happening right now, because we all know the markets have shot down over the last few months, and hopefully we all have a basic idea of why. But if you don't, it really comes down to one simple thing, which is that the USA government has implemented huge tariffs on pretty much every country in the world, and that in itself is bad for the markets. But if that wasn't enough, there has been a roller coaster of reciprocal tariffs going back and forth between all of the world's major economies like Canada, Mexico, the European Union, many others, and of course with China. But in between tariffs being put in place, we also have had tariffs being paused for 90 days, as well as being escalated and reduced, and China facing tariffs up to 245% on imports into the USA. But then, in a moment of reprieve, the USA exempted all smartphones, computers, and some electronic devices from the latest worldwide tariffs. All of this has led to the markets dropping based on the expectation that this trade war will make everything more expensive and affect many of the top companies around the world as well as the respective economies. So, what is going to happen next? Well, along with the rest of the world, no one really knows. It would be great if there was some sort of consistency or predictability, but these things seem to be developing by the day, and while we're in the game of economic chicken, any side could back down or escalate at any time. But that doesn't mean we don't have information that we can use to inform our investing. In fact, we actually have about 100 years of information about situations just like this one. You see, this is far from the first market crash, and every time we are in a situation that is causing the markets to drop, it's natural to think that this time is different, that this is the time that things won't recover and the markets will never get back to where they were before. But historically speaking, that has never been the case. And in my opinion, previous crashes have been caused by much more severe and systemic issues than what is happening right now. First, let's look at the granddad of all crashes, the Great Depression in 1929, when the Dow fell 89% from its peak. It was caused by rampant speculation, people borrowing money to invest, and eventually a bubble that got too big and burst, causing the banks to fail, unemployment hitting 25%, and the Great Depression is self-explanatory. But of course, it didn't last forever, and the markets eventually reached new highs. Then in 1987, the markets hit Black Monday and dropped 22% overnight. The cause was a big overvaluation in the market, drops that spread fear, and panic ensued worldwide, while relatively new computerized trading at the time caused automated selling off that created a huge market drop. But once again, over time, the markets recovered and reached new highs. Then more recently, the dot-com bubble in 2000, where anything with .com in its name was getting huge valuations and the market rose by more than 400%. Investors thought the internet would change everything, and it did, but not overnight. So soon enough, the bubble burst, and over 2 years, the Nasdaq fell by about 78%, an absolutely massive drop. But as we know today, all of the top companies in the world are internet and tech companies, and the markets definitely recovered. Then we had the 2008 financial crisis, which probably had the most deep-rooted fundamental financial system issues that caused it. It was sparked by the collapse of the housing market. Banks were handing out subprime mortgages like candy. Those risky loans were bundled together and sold, and when homeowners defaulted, the whole house of cards collapsed. Banks collapsed, the S&P 500 fell by more than 50%, and the world fell into panic. But again, despite these heavy and deep issues, it was not the end, and by 2013 the markets had recovered, and then came the longest bull market in history, lasting over a decade. And the last market drop that we all remember but try to forget was the COVID crash in 2020, where the market dropped by 34% in just over a month, the fastest bear market in modern history. But easy come, easy go, and it was also the fastest recovery in history, and within 6 months the market had recovered and went on to hit massive highs with the drop in interest rates. Then in 2022, when those low interest rates started causing problems with inflation and banks started to raise them again, we had another 2 years of market drops until 2024 and early 2025, where once again markets rose to hit astonishing new gains and reached its highest point in history. So, here's the thing. No matter how crazy the markets have gotten in the past, they've always recovered. Every single crash we just spoke about eventually bounced back, and not just back to where they were, they hit all-time highs. That's why it's so important to keep investing, especially during the tough times. It might feel scary, but these are actually the moments where long-term investors build wealth. When the market's down like it is now, with all of the trade war madness, it's a golden opportunity to top up your portfolio, and this is where dollar cost averaging is your best friend. Just keep investing steadily no matter what the market is doing, and that can lead to bigger gains over time. So don't panic, stay consistent, stay focused, and see the bigger picture. Right now could be one of the best times to plant those seeds for future growth. And speaking of that, I want to show you some great passive income stocks that I have been investing in recently. Because while share prices are low, the dividend percentage goes up right along with it. And now are some great times for dividend investing to grow your passive income. Now, the most important thing for me in investing is to make sure I am growing and placing bricks towards building my financial future. My goal is to financially retire by 40, which is 7 years, and I need to make sure I'm moving towards reaching that. Over the last 4 months, I have been creating and testing a simple but very powerful spreadsheet to track my investments, my wealth, and my passive income, and it's finally available for everyone to use in the Casual Cash store. The spreadsheet is super simple to use for anyone. All you have to do is fill in the cells in yellow and everything else automatically populates itself. So you type in the investments you have and any assets and debts. Then every month you put in their values, and here you can use an automatic drop-down menu to capture all your passive income, dividend payments, cash interest, or other investment income. The powerful sheets, graphs, and charts all populate themselves. It means that every month you can get a view of your overall wealth, your total investment values across multiple platforms, and see what is growing the most, what is paying you the most, and how much you are adding to your wealth and income every single month with an estimated annual income calculator based on the dividend percentages. But the coolest page for me that I use all the time is the overview page. That tells me how I've been doing with my investments and my passive income throughout the year. If I want to reach my financial retirement through my investments, then this is my headquarters. So if you want to keep track of all your investments in one place, how much they are paying you each month and for the full year, and most importantly, to track your wealth month to month and make sure you are moving towards your financial goals, then you're welcome to get your own copy at the Casual Cash store for just $8. And you can use this each year, again and again, by making a copy and clearing it for each year. So 2026, 27, 28, all are sorted as well. So you can check the link in the description and grab your wealth tracker. Now, while the markets are down, this means something very, very important for your dividend stocks and your passive income. Because if you didn't know, stock prices heavily influence the rate of dividends that you get, and not on the shares you own, but the shares you buy. Because while stock prices rise and drop based on the news of the day, dividends are a lot more solid and are based on company performance. So let's look at an example. Let's say a stock's price is $100 a share and it pays $10 dividend a year, so that's 10% dividend. Now, let's say the stock price drops by 50%. Now the stock only costs $50, but they are still paying their $10 a year dividend. So that means for the same stock, you can now buy one share for half the price, and you are essentially getting double the dividend, because a $10 dividend on a $50 share is now a 20% dividend. So, right now, we find ourselves at an exciting time in the market, because if we go over what we've talked about, right now the market is significantly down, but if we take what we learned about the last 6 market crashes, and that sooner or later the causes of the downturn get resolved, and over time the markets have always gone on to reach new highs. And at the same time, while stock prices are depressed, it means the dividend percentages of those same shares are now higher as a result when you buy them. So it's a chance to buy shares at a discount and at a higher dividend percentage that over time we can anticipate will bring in above average profits and passive income. We don't know the future and anything can happen, so do your own research, but that's what I will be doing. And because of that, I have been topping up my own portfolio with both growth stocks and dividend stocks. Specifically, I've been buying Realty Income at 5.5% dividends, Simon Property Group at 5.5%, EPR Properties at 7.2% dividends, and one I've been topping up quite a bit is the Global X Nasdaq 100 covered call, which right now is paying a whopping 14.2% dividends right now. And I've been tracking it each month to see how much my passive income goes up month to month as I add to my portfolio. And when the income reaches as much as my expenses, that's when I can financially retire. And guys, that is it for today's video. I hope you enjoyed it. Remember to like the video, subscribe to the channel if you want to see more, and if you want to be able to track your investing journey and build your way to your financial goals, then you can check out the wealth tracker in the description. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.